Good morning and welcome to episode 12 of Mortgage News Live, coming to you from the grey skies of the Shires today. Thank you as always to our sponsors MPowered, the Intermediary and of course Newspage for their support and WhatsApp mayhem. We have another interesting show this morning where we'll be mainly talking about the remortgage market, an area that clients in their droves have been concerned about as they stare down the barrel of increased rates. And also brokers have been concerned about through the amount of work they are doing to ensure clients get the very best rates when their product expires and the amount of remuneration or lack of they get paid when a product transfer is concerned. It's been a relatively quietish week in the mortgage market as we're in the midst of the Easter holidays, but we have seen Halifax come out with their latest index showing that house prices have dipped for the first time in 5 months by 1%, although they are still at a higher level than last year, just at around 0.3% up. Now, we know house prices can be fickle, but after several months of rises, it was no surprise that house prices finally fell slightly, reflecting tougher economic conditions and the fact that interest rates have not yet eased significantly. Over the past 12 months, house prices have, however, proved to be remarkably resilient. And despite this monthly fall, there is a tidal surge of pent-up demand waiting to break the dam at the first sign that interest rates are finally reducing. When this happens, house prices may well bounce back quickly, and we've already seen buyers return to the market, keen to look for deals before the recovery comes. For those watching swap rates, well, there's not too much to see, with daily rises and falls, meaning that there have been no really meaningful lender moves on pricing yet. The real economic data is still to come, and that will set the tone for the coming weeks. But enough of my frivolous fervour, and over to this week's prim and proper panel of professionals who will be discussing the overall background and laser focusing in on the remortgage market. Joining us today are Ben Perks, who's the MD of Orchard Financial Advisors. Hello, Ben.
Hiya.
Kat Atkin, the Director of Lincoln Mortgages and Protection. Hello, Kat.
Hey.
And that's a very cool hey, by the way. Hey. Sorry, I couldn't let that lie. Simon Wilson, the Key Account Manager of MPowered Mortgages. Hello, Simon.
I feel like I should say yo now or something.
Yo. I'm not sure that's really you.
It's a hello.
No, I've tried that before, and I just get disparaging looks by the youngsters, and who just look at me like, "Shut up, old man." But anyway, never mind that. So before we get into the nitty gritty of remortgages, Halifax house prices showed a drop. Easter seems to have slowed things down. Interested from you guys, how you finding the current market right now in your businesses, and also tell us a bit about where you're based, the geographical area you work in, and what's going on with you. Kat, you can start.
Thanks.
Ladies first.
Oh, why? Thank you. So we're predominantly based in Lincoln or Lincolnshire. I've got a number of brokers sort of scattered across the county, but our reach is much further. We deal with heaps of clients all over the country. We have been running since 2016, so we've got a good mix of new clients coming in through like lots of wonderful reviews and recommendations, and then dealing with a lot of remortgages for the back book that we've got. How have we found this year has been a funny one, hasn't it? It was super busy, had a really good start to the year, January, February. I think Easter has slowed down a little bit. Like you, I'm super hopeful that we're waiting for those interest rates to drop and it's going to go mental. I'd like that very much. It's hard work, I think, at the minute. But we're still seeing, I'm still loving first time buyer appointments, and there's still the reward for the job, I think. But yeah, it's a funny old market.
Yeah. What about you, Ben?
Definitely echo that. It's definitely a funny old market, isn't it? We're based predominantly in the Black Country, although we've got clients up and down the country and advisors spread sort of far and wide. But Yeah, in the Black Country, in terms of property prices and value, we've not seen huge movements. They've been relatively stable. I think we enjoyed sort of closer to home in the Black Country a huge increase in property prices, as most people did through the COVID years. So
yeah,
whilst they have fallen, they've fallen probably to a bit more of a realistic level. So it's not, people haven't had a huge upset in that regard. But yeah, in terms of the purchase market, locally it's very slow. We are doing bits and pieces, getting a lot more inquiries this year. I think people have sort of got used to the new norm, as everyone keeps calling it. We're seeing a lot more inquiries, but people are much more cautious in buying property. They're taking their time. They're making sure everything's the right fit. Far from sort of two and a bit years ago, where a property would come on the market on a Thursday and it'd be sold for over asking price by the Friday. So that's definitely changed, and we're doing predominantly remortgaging, is what we've been doing as a business for the last, well, since Truss dropped to bomb. Yeah. So that's sort of as we're finding it in the Black Country at the moment.
Yeah. And Simon, how's it started from a lending perspective then for you guys?
Yeah, from a geographical point of view, I cover Essex, London, and the southeast.
Yeah.
So I can speak to that area quite well, and it's a regular question. No matter what the market is doing, is a regular question I get from a lot of my brokers: is, are you seeing things like down valuations and things like that? I would say the kind of summary that you gave at the beginning, Monty, was pretty much spot on. You know, I've not seen really any significant amounts of down valuations this year until very, very recently. Maybe even in the past couple of weeks, maybe I've seen a couple more than what I'm used to seeing. It's not significant. It is very, very minor, usually in a lot of situations, not impacting on the lending. So that's always a bit of good news, or the product that these customers can get. So yeah, it's definitely still for us. We're picking up and getting busier and busier as the year goes on, quite frankly, and we're seeing more business from our kind of popularity and just more people knowing about us as a new lender, to be fair. But as far as property values go, yeah, maybe a slight dip in the past 2 to 3 weeks on some down valuations, but that's about it.
Are you seeing more down valuations in purchases or remortgages?
This, I would say, it's probably more in remortgages. I think we are all guilty as homeowners of believing our properties are probably worth a little bit more than what they are. You know,
yeah,
it's your domicile. It's and I think, you know, no customer or broker is probably any different in that sense. So probably, yeah, more on remortgages, just based on the estimates from the customer. Yeah,
that doesn't surprise me. It's in actually coming to the remortgages, and this is my segue into it. So, and I read this morning, actually, which is quite interesting. With the IMF said that most central banks had made progress in meeting their inflation target, but over tightening or leaving rates higher for longer could nevertheless be a greater risk now. And interested to see how you all see this, and linking it into the remortgage market with some, I don't know, there's about 1.5 million people still to come off mortgage products this year. Are your clients still concerned? Is affordability still the big issue coming off lower rates that they might have taken 3, 4, 5 years ago? Or are they all starting to get anchored into what the new rates are? Ben, what are you finding?
So affordability is still massive. It's a huge sort of issue, and definitely sort of the apprehension in terms of clients who are coming towards the end of their fixed rate. I think it was something like in Q1, 55% of the rates that were ending, they were coming off less than 2.5% onto the new rates. So a lot of those people, it's effectively doubling the rate that they're going to be paying. So attitudes are adjusting slightly. I think people are they're fearing the worst, and then it's not quite as bad as they've been fearing. But albeit it is a significant increase for people. So whilst I think people are getting used to higher rates, they're certainly not enjoying them, and they're certainly not looking forward to them. We're seeing some big increases for clients, and it's leading then to some very difficult decisions that they've got to make in terms of their current lifestyle, their current plans.
Yeah.
People looking to downsize as a result of it.
Right.
A lot of people going without certain things. Cars have had to go, and sort of those sorts of additional extras. So people are definitely feeling the pinch of it and not enjoying it, but their heads have adjusted to, well, this is the state of play at the moment, and it's where we're at, unfortunately.
Yeah. And Kat, is that similar to you? Are you starting to see things like you're having to do certain things like increase terms and maybe switch to interest only, et cetera, et cetera?
Yeah, absolutely. I mean, I've seen a couple of clients over the last 6 months where, they like Ben's just said, they've been having to look at downsizing. I had a couple who were hoping to get married and had to sort of put that plan sort of further down the line because the mortgage payments were eating into anything that they were able to save on a monthly basis. So I think it's a big shock to the system in terms of the finances. And I mean, I know there was a lot of people bought during COVID on sort of a 5-year fix that are now coming up to where their interest rates changing. And I think that, I mean, I was reading about a homeowner sort of inflation, and that figure has started to make an impact to inflation. And I think that there's going to be more and more people coming off their 5-year fixeds over the next sort of 6-12 months that are going to increase that quite a lot, I would imagine. Terms are something that we're looking at, which not only means that the clients are having to extend their mortgage term, pay, more interest, maybe retire later, but they're also having to adjust their protection as well to make sure there's no shortfall in the term. That increases the monthly premium on that as well. So there's a lot. It's not fun. It's not the conversations that we used to have not very long ago, where look, I can reduce your term, I can save
exactly,
interest and save you all this money. And now it's like, I'm really sorry, this is the best thing for you, and this is the best way we can do it. And your premium, your monthly outgoings are still going to increase by £200-300 a month.
That's a good point, actually, Kat, because the remortgage conversation always used to be quite
fun.
Quite a nice conversation, wasn't it? Oh, how are you doing? Oh, yeah, we can reduce your mortgage. Really? Oh, wow, that's excellent. Oh, you can have more holidays, and you have a joke. And now it's a lot more stressful, isn't it?
It's a damage limitation now, isn't it? It's
that's interesting.
It was very jovial, and it was do you want to shorten your term, and do you want to spend this on fun stuff, and it was all very helping people with their plans and all that sort of stuff. Now it's very much a meeting where you sort of take stock of what's going on and like what's important to you. And like you say, we've done cases where we've switched people to interest only, where we've put people on part and part, where we've extended terms. What's really sad about that is that the saving actually isn't really significant. By switching to interest only, they're not saving loads of money. It's just helping them get by. So it's been a real shift. It's been a real shift. Yeah. I said something else.
It's all right. You can swear. Although I haven't actually tested it other than to say follow once. Twice now. That reminds me of a very funny Monty Python sketch, but I won't go into that now. So actually, Simon, so we'll come back to some of that in a minute, because there's quite a bit to unpack there. But what are the lenders' views on the remortgage market this year? Is it a big space for MPowered, and how can you make the process get better for brokers and clients?
Yeah, it's a really good question, actually. And going back to your original point, payment shock is definitely and affordability is definitely one of the hardest things that we see with our applications, and the reasons that potentially we have to say, unfortunately, we can't help. But we do believe it is a very big market. We do see the large majority of remortgage applications coming through with some element of capital raising because of the product transfer options. And the fact that PTs are seen as really the path of least resistance, if the rate is competitive, of course. But we as a lender do believe that like-for-like remortgages shouldn't be ruled out at all completely. You know, even if there is a very small margin there with regards to the best possible rate, remortgaging with a lender like us, it should be an extremely seamless process. And I'll give you an example. You know, we're working extremely hard to ensure that that process is as easy or can be as easy as it possibly can do, like a PT, for example. So yesterday, a great timing for us, we had our very first completely automated, fully underwritten case that auto offered straight away as soon as the button of submission was pressed. You know, AVM was carried out, the system carried out the full system underwrite and issued the offer straight away, which is effectively the same process.
That was a remortgage.
It was indeed. Yeah,
interesting.
Yeah, so effectively the same as a PT process, therefore giving you the customer the best possible option for product on the market, because maybe the existing lender wasn't offering as much of a competitive on PT, but making it also the path of least resistance and the easiest way to do things as well. So we feel that, yes, the majority is capital raising, etc., but it's definitely not something to be overlooked on a like for like, because there are, you know, lenders like MPowered that really can get an offer out straight away, and then as long as you're comfortable with the solicitor situation, getting it through as quickly as possible for you, you know, that is a great option. So yeah, we do see quite a lot of remortgages, not just as many like for likes.
Yeah, it's interesting. I'm interested from broker perspective, Ben and Kat, around your client retention policy. Some brokers are really good at it, some keep in contact with their clients, some are not so good at it, I think it's fair to say. And it's quite interesting to see some of the stats from the lenders that say that actually it's not a massive percentage of cases that come back to them from the same broker. Which is quite interesting. Obviously, that varies from broker to broker, but on the whole, it's not as great. So how are you guys making it work, keeping in touch with your clients, and when do you start the remortgage process, really, Kat?
As early as possible. 6 months and a week before the product it comes to an end. But we stay in touch with the clients. We, you know, we're all about customer service. We're all about making sure that the client understands exactly what they've got going on. So, and you know, being there throughout their mortgage life, if you like. So, yeah, we speak to our clients. I mean, I'll text my clients, to be honest. It's quite casual. We do send emails and do all of the standard stuff, but I will, you know, it's really quite a personal service. So, and I think that makes it easier, to be honest. The clients, you know, if they get a text from Kat, their mortgage advisor, and we were, you know, WhatsApping throughout their process originally, it's just kind of normal. And I think that helps with engagement, I think.
Yeah, absolutely. Ben, what about yourself?
Same. Well, we're 6 months. So I'm going to throw the extra week on it now to make sure I'm in line. But yeah, so 6 months in advance, we get in touch. Again, very similar. So we do the sort of the system automated stuff where it pops up a reminder. But I personally love to send the text out to clients. It is just a bit more, oh, it's your mate who's doing your mortgage for you sort of approach. But I think the firms that have had poor customer retention previously, I think this is something that's going to change going forward, because you can't be a business at the moment that's just doing new purchase, because they're just not there in the quantity that you need them. So unless you're building that rapport at outset with the client and you're getting that relationship and that sort of friendship in place on day one with the client now, it's going to be very difficult for you. It's all about customer retention, all about the remortgage and product transfers and keeping relationships going, because if you haven't been doing that, then I would say the last sort of 18 months have been very difficult for brokers that haven't taken care of and tried to build in a good retention policy to their business, because it's key. It's key at the moment.
Have you guys used any tech to help you? Because there's things like Dashly and Eligible and various other things as well.
Not yet.
No. I've looked at Dashley actually, and a couple of the others, and they're brilliant. They're great systems. And the only reason why I haven't at the moment is what we're doing at the moment seems to be working. So it's sort of, there isn't a massive need for it now. As we grow as a business, I'm sure we'll have a greater need for it. But as of right now, I haven't invested in any of the tech.
So we're with MAB, and they've got some new tech that looks quite good. So it's something that's on my radar, but I haven't quite got around to that yet.
No, it is. I mean, tech can work. It's like all tech, isn't it? As Simon will know, it's about how you use it, really, and you've got to make sure that the data is accurate. Absolutely. Before you actually use it, and that data integrity at the front end becomes really, really important at the back end. Shit in, shit out. Oh, there you go. I've just tested the swearing. Apologies.
But also, we're going back to how personal we make it. If you've got, you don't want the tech to sort of overtake that, so that they know they're getting notified by an app instead of CAT. Then there's a balance in that.
It's that balance, isn't there? Yeah. So it would be remiss of me. This is where, if there are any lenders watching, they'll probably just leave the room. To not talk about this without the big discussion around PTs and proc fees. And look, it's not just that lenders pay a much reduced amount, but also clubs and networks take their share, which leaves the broker feeling that they often do treble the work for a third of the pay. One example I saw today, actually, I know these figures, it's a London-based advisor. And thank you, Lee Karasavas, for sharing this on LinkedIn. So submitted 2 mortgages for the value of about 1.2 million 2 years ago and earned around 5 grand. Now, after significant research, extensive compliance, full due diligence, has redone both those cases, and it's now £1,800. So that's a 66% loss of income for the same work, if not arguably a little bit more work. So where do you guys stand in the Remo PT debate? Ben, you can start this one off.
Thank you. What he hasn't mentioned there, unless he did in the full post, is that in addition to all of that work, he's also had to rate watch as well recently, and probably
correct. And will be rate watching all the way through.
Redo things as the better rates become available. That means he's got to reapproach the lender, redo the work, new correspondence out to the client, and all the conversations that go with it. So the good old days of a product transfer was a simple click of a button, and client sorted, yours sorted, you get the file done, and away you go. That's just not the case anymore, and won't be for the foreseeable. So it'd be nice to get a bit more. Where that lies in terms of percentage, I don't know. I do understand that the option is there for the client to do it themselves, so the lender's always going to hold a little bit back, but there's a lot more work than there was with the product transfer. So it could do with improving.
Kat?
No arguments there. I mean, effectively, we've had a pay cut, haven't we? Because there's fewer mortgages, fewer purchases. So we're all about the back book, and there's a significant amount of clients who have issues with affordability. So we're looking down the product transfer route. I don't know about Ben or other brokers, but we generally charge a lower fee, because there used to be less work. And exactly as Ben's just said, the client could go to the lender themselves after taking our advice, go, oh, it's all right, I'll go and do it myself, because it's relatively straightforward. We've all had a big pay cut, so it would be nice for that to be reviewed, is my frank opinion.
and before obviously we all turn on Simon, but actually Lee is watching. Hello, Lee. So he's also mentioned that gross proc fees haven't moved for years at all.
He said 15 years there. I think it's probably longer. Sorry.
Yeah, might well have been. But yeah, look, it's a difficult thing. We try and see both. I always try and see both sides of the coin. It is difficult. I think there's always been a misconception that because the actual process once you apply for a PT is easier, that means a broker does less work. But that's not true at all, because all the brokers' work, or I always say that 95% of the brokers' work is all done before application, pretty much. And then if you've packaged it right, you've done the right resourcing, etc., researching, then actually the process itself should take care of itself. But Simon, where are you on all this?
Well, first things first, Ben, I hope Lee did mention about rate watching, in his post, because he's actually my broker and my remortgage complete. So, Lee, if you're listening, mate, your eyes peeled.
He is listening.
Yeah, good. So
I know Lee. He does do that. He's a very good broker.
So look, let's get to the crux of it. I'll do this head on, as it were. So, for new business, we pay a 0.4 procurement fee, and for PTs, it's 0.2, which is pretty much market, standard within the high street lenders, etc. I sympathise a lot with brokers on this, and the amount of work and compliance, etc., that has to be done up front. It can be a difficult conversation to have with some people. That is half a procurement fee, but what we do at MPowered is that we really, really do hang our hat on being an intermediary lender and ensuring that we are pushing the customer back to the original broker. So we write to the customer 6 months in advance because we're part of the charter. That's when the PT process can start. And within that letter, we state, please approach your original broker. I think the aggressiveness from some lenders around trying to let's say how it is, try and pinch your customer from you. We believe your customer should be your customer for the full mortgage term, not just for the first 2 or 5 years. So we will always look to push the customer back to you and make sure that you get paid for that product transfer. Even to the extent my boss sent me an email yesterday with a list of PTs coming up in the next couple of months, all of which go into my diary. I contact the broker 2 to 3 weeks in advance of the 6 months just to make sure that they're aware that it's coming up.
Yeah, that's good. Period.
I think it's very important for the lenders to work with brokers on this as much as they possibly can do, because of the pay cut that you guys have to take and all the work that you have to put into it. So, we're very much an intermediary only lender, and that's the way that we like to view that situation with PTs, even though it is a slightly less population.
And some of it is it's interesting, isn't it? There's Ken, some of the comments, keep the comments coming on LinkedIn, by the way. If you're watching, that's easy for me to say. Ken has put so much work involved, but I don't feel clients understand the level of monitoring we now do. Well, that's our fault, isn't it? That's something that we as brokers need to get out there more, that we are doing this additional job, and perhaps we should be able to justify fees on it. But I think
part of the thing on that, sorry, Monty, the part on that though as well is, and this popped up in the last one of these that you did. We, as brokers, quite a lot, we take the pressure and the strain off. And so you don't always go to your client and moan about how much work you've got to do for them, because it sort of gives the wrong impression. So quite a lot of the time, brokers will sort of quietly go about the business and do all the good things, but not burden the client with, oh, well, I've had to change this 6 times for you now, which I've actually had to do on one case. So you just don't bother the client with the bad bit, and more so you just say, oh, good news, the rates dropped slightly, we can get you a better rate, and you leave it at that. So it's kind of, we've got to be a little less reserved and actually share the work that we're doing a bit more.
Yeah, I'd agree. And Kat, do you think it's too easy now sometimes for people to remortgage without taking advice, and just pressing a button means borrowers don't consider whether the lender's still right for them, the rate, the term, the repayment method, and what should borrowers be considering before remortgaging?
I mean, monthly payment is up there on everybody's agenda at the moment, and I think that there's been so much focus in the media about what interest rates are doing that people aren't considering their own personal circumstances as much. So I know when I, like, for as long as I've been doing this, I've always sat down with a client and looked at their personal circumstances. You advise to the client, not what the interest rates are doing. And I think that most of the conversations that I have that are led by the client are all about what are interest rates going to do, what interest rate shall I take. And so I think that it's really important to remind everybody that their mortgage is and should be tailored to them and their individual circumstances. So it's not always about, you know, taking a 5-year fixed rate because they're the cheapest on the market at the minute, or do you know what I mean? It's definitely important to review your circumstances, and that's where we ask the right questions. If we're good at our jobs, then we really get to know our clients and therefore can advise on the entire circumstance.
Yeah,
I think.
And another example, Jane has commented she's finding a fair number of her recent remortgages included debt consolidation to ease the pressure on the monthly outgoings. A lot of people just don't realise what you can do at remortgage, do they, Ben?
Absolutely, yeah. There's all kinds of personal circumstances that enable all avenues to be done. You know, offsets and trackers as well. There's so many different products. It's definitely worth speaking to an advisor who can look at all of that circumstance, I think.
Yeah.
The pressure has been bigger than just the monthly payment, hasn't it, over the last 18 months? It's the household movement as a whole. So what we're doing, we're seeing quite a bit of debt consolidation and home improvements and things like that, because people have decided not to move into that bigger property and to sort of amend where they are. So it definitely needs review. I think it's an interesting topic because it'd be interesting to see how much longer can clients just go and select a new rate with a few clicks of a button in such a short time frame without seeking proper advice, because it's kind of contrary to consumer duty, isn't it? You know, is that in the best interests of the customer, especially if you've got a vulnerable customer who can just go on an app, a few clicks, and lock into a rate there and then? It doesn't really provide the best outcome or customer journey, which is what we're all having to adhere to. So it'd be interesting to see if that changes at all.
Yeah, and then the interesting question out of that, I guess, is if you're the broker who's say giving them advice, let's say 15 years ago now, and that was your advice, and then they've taken 3 or 4 just non-advised clicks of a button, where does that advice risk sit? Does it still sit with the original broker, or actually, even though lenders are thinking, well, there's no advice there, is there must surely be something there, especially if, as you say, Ben, they've become vulnerable and no one knows about it. I think there's a big grey area there for potentially for lenders who just accept that going forward.
It's hiding behind execution only, isn't it? But is execution only the best thing for the customer? And that's going to be the biggest question, I think, with this go forward.
Simon, are these conversations I mean, the whole vulnerable customer debate must be taking up. I know it takes up a lot of lenders' time at the moment.
Do you know what? To be honest with you, Monty, I was thinking it more from the customer's point of view with regards to my situation that as I mentioned, I'm just going through my remortgage at the moment.
Yeah.
The situation about someone's, doing a full financial review for someone is such a good point by Kat and Ben, because the conversations that me and my partner had about before remortgaging started happening about 6 months before we had the conversations with Lee.
Yeah.
You have to look at your circumstances. We know the payment was going to go up. It's going up by £400 a month, which is significant. So that conversation doesn't happen. That sort of reviewing your own financial situation doesn't necessarily happen only when you start speaking to the broker as well. We had to take steps before speaking to Lee about the remortgage process. So it's such a great point to state that it isn't just about that cheapest rate. It's the whole situation of which the customer is dealing with, what's going on in their life, have they had children since they took out their mortgage, etc. Because it has a massive impact on overall affordability. And something like an execution only situation, like Ben mentioned, it's technically could be quite dangerous for a lot of customers who don't understand how much that is actually going to impact on their overall affordability and their life and what they can and cannot spend on going forward. So yeah, vulnerability of customers is something that we as a lender keep an eye on very, very closely. And it is a very good point, well made, that an intermediary adds so much more value than just here's a rate. It is about a full financial review. It is about understanding the client and their situation. So yeah, it's a massive thing, I think, to make sure that an intermediary is used for all mortgage transactions.
What's brilliant is that as you said that, it looked as if you were wagging your tail.
Love brokers so much, Monty.
I assume there's a dog in the background there.
Well, yeah, there is. I did say to Ben earlier, I'm hoping that she doesn't make an appearance, but there we go.
No, it's all right. We welcome everyone on this. No, that's really interesting. And actually, so Simon, just with that remortgage process, is there a better choice of products that lenders could offer on that remortgage side? Are we missing things? Are there, we've sort of had the green debate, but that's also a part at remortgage when people can raise funds to maybe make their homes more energy efficient. Kat mentioned offsets. There don't seem to be a great deal of offset mortgages around at the moment. What's your view on that? It's the same product set we've had for years, isn't it?
Yeah, product availability is massively key, and innovation this year, I think, is definitely something that needs to be worked on with most lenders. Having things available like ERC trackers, etc., in preparation for hopefully later in the year with some good rates coming, etc. Or even to the extent of making sure that as a lender you have the sufficient add-ons with products that you would expect. So making sure that you've got fee-free products. I know it sounds simple, but all of it helps, and making sure you can add it to the loan if applicable. A free standard legals or a cashback, is it the best option for the client to go with the free standard, depending on what is actually covered within that free standard legals? I think is very important. And
don't get me started on free legals.
I didn't want to start
a whole other podcast. I think we need to cover that. Yeah,
I think what that comes down to, then, Monty, is transparency of the lender.
Yeah.
I think that's the most important thing. We send out with the offer pack what is included and what isn't, and the cost of each, as what the standard free legals is included.
Simon, do you think that rather than an offer, should that not be available somewhere sooner? Because that should be something that's taken into consideration at recommendation, really.
100%. We plaster it all over our website. We make it available to you and the customer straight at the front end as early as we can do, because I think every lender has a different view on this, and depending on the contract that they've agreed with that particular solicitor is whether it's going to be... See, that the dog's interrupting.
That's all right. That's my fault, because I drew everyone's attention.
So yeah, you're spot on. I think understanding and having it in front of the client to make sure that they're prepared for if there is any extras. We use a great firm called Henner Hayward, who provide a great service, and that's why we've chosen to use them. But at the same time, if they're doing additional extras, things like transfer of equity, because they are a higher end solicitor, that may not be the cheapest option for them. So would they be better off with our £500 cashback instead? That's it. And you're right, having those conversations and understanding to what to expect out of the transaction is important.
Yeah, that choice is important, isn't it?
Yeah. So yeah, product innovation in that sense is very, very important. Personally, I would like to see us doing more of an offset as well and things like that. So I think that's something. We've got a great product team, actually. You've had Peter on
Yeah. No, really good product team.
Absolutely top bloke and really knows his stuff. Like I've not worked with a product team as good as ours actually before. So yeah, Peter and Amanda are cracking and always coming out with different ways and ideas to come up with different better options for customers. So in the sense of like earlier in this year, we had cashback options up to 0.3%, for example, based on the loan size. Now that could be perfect for a customer who's looking to do a bit of home improvements or whatever it may be. So, product innovation is very important. And I think we'll probably come out with more and more as the year goes on.
Very good. So look, 40 minutes just goes, really. It's really quick. What I love about doing these, I love doing these because Simon, you've been fantastic and really good, very, very eloquent. So thank you. But also meeting all these brokers all around the country who are not just evidently passionate about looking after their clients, they're bloody good on screen too. You're just naturals. So thank you very much, both of you. But any final words of wisdom to both brokers and borrowers alike when it comes to remortgages or the market as a whole? Ben?
Get in early, both borrowers and brokers. Start thinking about this at the soonest possibility, because the best thing you can have going into your remortgage is time to consider your options, consider your budgets, and shop around if needed.
Very good. Kat?
Yeah, completely agree. I would also sort of just add that it's about the entire situation. So make sure that you look at your protection as well. If you're making any changes for extra borrowing or the term or whatever because of the monthly payment, then yeah, it's really important to review everything.
And Simon, as we all ganged up on you on proc fees, you could have the last word.
Good stuff. Right, so I'll do it from the lender point of view. So if you are capital raising on a remortgage, just make sure you've got your document ducks in a row. Things like home improvement, some lenders will want estimates, some won't. If you're debt consolidating, have you got all the account numbers, etc.? Everything to give your lender the best possible opportunity for a one-touch underwrite. That's what we're all about at MPowered, and ensuring we make it kind of the path of least resistance, like a PT, as I mentioned before, and ensuring you've got all your documents and ducks in a row makes it much easier for us to get that offer out to you straight away.
Brilliant. Well done. Well said. So, yes, we are out of time. So thank you very much to our guests, Ben, Kat and Simon. An article about the live will appear in the Intermediary, and I do encourage you all to get involved with the Newspage. The more voices we have, the better. We have started out shouting the Star Broker of the Week. So please tag MPowered on socials when you've seen a broker go above and beyond. And this week's shout out is to, and I hope I get your name right, so please apologise. It's Myra Oliveira from The Mortgage Mum. Hello, big shout out. We're recognising Myra's exceptional service, with clients praising her for being dedicated, attentive and efficient. Her personalised approach sets her apart, as clients not only commend her professionalism, but also highlight her as a remarkable mother and an extraordinary individual. There you go, a huge well done. Finally, remember, you can listen to all of these on Spotify. All the podcasts will be available there. If you've enjoyed it, I've been Andrew Montlake, or Monty. If you haven't, I've been David Cameron. Until next time, have a great week.